If you misinterpret the Fed's recent silence, you risk getting wiped out by what could be the single biggest capital shift in modern history. You see, the market isn't just rallying on hope anymore. It's reacting to a deep, structural change that most investors don't even see yet. But by the end of this, you will understand the new market cycle that's just getting started.
The entire crypto market is on a knife's edge right now. And like I said, if you misread what the Fed is doing, or in this case not doing, you could get run over. This isn't just another rally. It's something different. And we're going to give you the map for this new territory.
So, how in the world did we get here? Well, it all kicked off with the Federal Reserve. And, believe it or not, its surprising silence. Let's dig into how doing absolutely nothing managed to spark a massive market fire. Okay, so picture this. The entire financial world is just holding its breath. Everyone's waiting for Fed Chair Powell to step up and give his big speech on the economy. We're all expecting some kind of guidance, a signal, anything. And what did we get? Crickets. He said absolutely nothing about the economy. It was a total anticlimax.
But here's the thing. In that silence, he actually confirmed one absolutely critical detail that the market jumped all over. He made it crystal clear that quantitative tightening is over. And for investors, that was the green light they were waiting for. It was the signal that the big squeeze was done, and the market, well, it reacted instantly.
And when I say instantly, I mean it was immediate and it was brutal. In just the 60 minutes after that non-announcement, $140 million in shorts got liquidated. Just wiped out. That's the price you pay for being on the wrong side of a moment like this. The game had just changed, right then and there.
But that initial spark, that wasn't just a flash in the pan. Nope. It basically opened the floodgates for the real engine that's driving this market, Wall Street's money. And I want to be clear, this is not your typical retail pump. This is a full-blown institutional invasion.
First, you got to look at the plumbing, the infrastructure. Right now, there are 18 publicly traded U.S. Bitcoin ETFs active. 18. Think about that. These are brand new, regulated highways for big money to pour right into crypto. It's a seismic shift from where we were just a year ago.
And is that capital flowing? Oh, yeah. Just look at BlackRock, the biggest asset manager on the planet. Their Bitcoin ETF traded 1.8 times $1 billion in volume. And that's not for a week. That was in the first 2 hours of a single day. The scale and the speed of this money coming in, it's just staggering. And if you need any more proof that the old guard has finally showed up to the party, just look at Bank of America. I mean, this is a major, pretty conservative bank, and they are now officially recommending clients put up to 4% of their portfolios into crypto. When a bank like that gives the nod, you can bet that the big money is listening. This is a huge change in mainstream advice.
But here's where it gets interesting. All this institutional money hasn't convinced everybody. In fact, it's created this intense battleground among the experts. You've got the bulls on one side, the bears on the other, and they are in a fierce fight for the narrative of what happens next.
So let's break down the two opposing views, because you really need to understand both. The bulls, they're pointing to that insane institutional demand we just talked about. They see pro-crypto regulation finally happening, and a whole new wave of innovation. But the bears, they're sounding the alarm. They're worried about extreme leverage in the system, the risk of these cascading death spiral liquidations, and, just general storm clouds in the global economy.
So in the bull corner, you've got guys like Tom Lee from BMR. He's a well-known optimist, and he's out there saying Bitcoin will hit a new all-time high before January is even over. But he's not just talking. His firm is putting their money where their mouth is, aggressively buying assets like Ethereum, even on the dips.
But then, on the flip side, you have a Bloomberg analyst warning that the pain is far from over. See, the big concern is that all this leverage, it's a double-edged sword. It's great on the way up, but it's a killer on the way down. The fear is a cascade of sell-offs, where one big sale forces another, which forces another, creating this negative feedback loop, this death spiral.
So who's right, the bull or the bear? Well, what if the answer is that they're both arguing about a game that doesn't exist anymore? They're using an old, obsolete map. Let's talk about a new framework that could explain everything, the new 5-year cycle.
Okay, so first, a super quick refresher. The business cycle is just the natural rhythm of the economy, the expansion and contraction. Now, for its entire history, crypto has followed a pretty predictable 4-year cycle, almost like clockwork. But that's where things are starting to get really interesting.
So, according to analyst Raoul Powell, something fundamental changed back in 2021 and 2022. There was a structural shift in the debt markets.
Basically, debt maturities got extended way out. And what that did was stretch the entire business cycle out by about a year. So that old 4-year rhythm, it's now a 5-year cycle. This changes everything, and it now projects the peak of economic activity all the way out to 2026.
And as Powell himself puts it, the 4-year cycle this time around is a 5-year cycle, because that extension of the maturity of debt has pushed out the business cycle a year. It's a pretty straightforward cause and effect, but the implications for timing this market are absolutely massive. All right, so if this new, longer cycle is our roadmap, what's the fuel for the journey? Well, that brings us to the final piece of this puzzle, decoding the great capital unlock and figuring out what happens when all money becomes programmable. See, the next massive wave of growth, it's not just about more people buying Bitcoin or Ethereum. It's about tokenizing everything else. We're talking about real-world assets, or RWAs. Just try to imagine traditional things like real estate, stocks, even fine art becoming programmable tokens on a blockchain. The liquidity, the speed, it's a total game changer. This is the capital unlock.
So let's put it all together. Here's the thesis. 1. The Fed's pivot kicked things off by ending the tightening and sparking this rally. 2. Wall Street's capital flood is the real sustainable power behind it all. 3. And this is the big one. The old 4-year cycle is broken. We're in a new, longer 5-year cycle now. And finally, the tokenization of real-world assets is what's going to unlock a tidal wave of liquidity to fuel this entire thing.
Which brings us to the most important question. The old market map is completely obsolete. The rules of the game have fundamentally changed. So, are you prepared to navigate this new territory?
If you found this breakdown of the new market reality useful, do us a favor and make sure to like, share, and subscribe for more insights right here from Crypto Global News. Thanks for watching.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.